Hi everyone, and welcome back to your daily Bitcoin update. Bitcoin is now approaching a very important level, and it's a zone I've been watching closely for a potential long entry. In this video, I'm going to break down why the 70,000 area matters so much, and why this could be shaping up as a macro swing long opportunity. We're going to go through the chart step by step using multiple layers of analysis. We'll look at Elliott wave structure, Fibonacci levels, fixed range, volume profile, anchored VWAP, and the key moving averages. Then we'll zoom out and focus on the weekly and monthly candlesticks, because that's where the bigger story becomes clear. And when we combine all of these tools together, we get what we're always looking for in trading confluence. After that, we'll bring in momentum indicators like the weekly RSI and wave trend to help us judge whether the market is getting close to forming a real bottom. Then we'll drop down into the 3-day time frame and the daily, so we can tighten the structure and pinpoint a more precise entry zone. So you can treat this video as both a trade breakdown and an educational session. If you're here to learn, you'll get value from it. And if you're here to trade, you'll see exactly what I'm watching and why. Now, the chart you're looking at here is Coinbase. It's great for macro context. But when it comes to finding cleaner entries and more precise price action, we're going to switch over to Bybit. Bybit tends to line up better for confluence, especially when we start refining the setup. All right, let's get into it.
But what we want to do is just highlight what we have here. We have a wave 1, wave 2, wave 3, 4, and a 5. So when you see that, that was historical. And you can see how it can turn out. Wave 1, 2 could look big on the chart, and 3, 4, 5 look small. Similarly, we have a wave 1, wave 2, wave 3, wave 4, and wave 5. Here, we have some challenging setup that we can walk you through it. You might align it with this, or it could be something different, and we'll explain. This could be a flat correction as well. That's why the 5 is there. We'll justify some of this with our fib levels, and we'll walk you through that. I think it's important for me to explain why, and then you will look for the confluence. So if I explain how the fib aligns with this, then we can also show how the Fibonacci aligns on the way down. We've got the 5-way count. Also, we can have a 3-way count all the way down. We have our 1, we have our 2, we have our 3, 4. Question is this 5? Or we're actually thinking 5's higher. And we'll explain why. People use this a lot. We can say that is a trend line that could play its role towards the end as a resistance. Or just the body of the candles, then you can see that wave 5 in a way is correct. And this sort of could be something different. But this trend line shows you why this was pretty much a strong resistance level. We've got confluence all the way through. Having said that, we can also go to our regular, our logarithmic. We'll go to a logarithmic chart, and we can also say this is confluent for resistance as well. And one can argue that this trend line is the reason why we crashed hard. Once we lost that trend line, we drop hard, right? Makes sense. End of a trend. People use this, but we can also use moving averages, and the moving averages also show that we, on the big picture, we have dropped levels. From an RSI perspective, I would probably like to show that right now. We'll add in our RSI. If we look at this chart historically, we notice a few things with it. The bottom is at a minimum is there at the 30% level. We didn't quite reach it yet. So I'd like to see that happen, and that's why 70K might just fill that position up. Here we have a real capitulation matching up here. So if we would just get our vertical, that capitulation on the RSI shows you that. And then we get a by 3 to 4. And what happens in a descending wedge, you tend to get a bullish divergence playing out. So as I said, this could be educational for you. Here, from the RSI perspective, you can use a level. So let's just do that for a sec. You can use flat levels as a means of confirming that you've broken out. So if that's our level from the previous as a resistance, breaking out of it, well, breaking through this moving average on the RSI, that's our point. So let's just tag that. That was our breaking at that point, and then we broke another point, the level. So we have confirmation that this is breaking out, and we've got a bullish divergence. Similarly, we actually break through the moving average on the RSI around there. That is the bottom. This is a breakout. Let's just change that color to something darker. Somewhere there. By doing this, we're going to be just focusing on the RSI and giving it legitimacy. And so what we're looking at now, from this perspective, when this level, you might argue that is the trend line, and breaking out from that level, not just the moving average, and that resistance line, we get the bull move with a bullish divergence playing out. So what we're looking for here is something too early, but if it does drop there, we're looking for a bullish divergence taking place along these lines. And so if price was to come down, bounce, and it might bounce to that level there, and just see a bullish divergence play out. And if we do it, we're going to be comfortable with that. If it drops further, then I would say that 50K, anyway, we'll go through that. But we have two scenarios with the RSIs, one further down. Now, what we can see from this RSI level, the previous high, you can see that was the resistance as well. So this resistance, that resistance might, and you can see that bit of a support, that might just play resistance. So on a weekly basis, we can use the RSI for confirmation. And how we enter it from a spot, this might be it. If it breaks below, we have other tools, but we're not going to go into that. But that's one way of looking at it. And so if we align that, you can see the breakout with the RSI gives you conviction there. And similarly, we might have it over here as well. Now, if we look at from the wave trend perspective, wave trend crosses over. That's what I like about it. When it crosses over, it helps us. We're going to have to, it's a bit smoother. So we can use this crossover function, and it crosses over a lot. What we have on the weekly here is crossover to the downside. So it's too early. But with the wave trend, you can see previous low come all the way down here. Make that red. And the second time around over here. So those are two levels similar to RSI we're going to be looking at. So we can get a move that we just, and we've got a crossover similar to this on the way up. It might be a bullish candle, but we want to see bullish divergence take place. So here's a bullish divergence. Prices coming down. RSI indicator on the weekly is going up. So we want to see that if you want to be conservative. And similarly, we can do that, or we can use this as well. You can see with the wave trend, when we break past that, we dropped a lot. And that level there corresponds to that dropping. And you can see it just kept coming down and down with this indicator. And so there was no bullish move. And that's why it's a bear flag. So from the indicator perspective, we get a good idea what's going on. If we use Fibonacci, now we're going to dive into Fibonacci and align it with our chart, with Elliott wave. And you say, why is 2 there? Why is 1 there? Well, if you think of a corrective wave, so you need to know Elliott wave theory. That's ABC. Basically, a simple step, corrective wave, and so 2 becomes there and 1 is there. And so why is that important? Because when we use Fibonacci, that becomes important. Now, what we can do is here, interesting enough, from the bottom, low, to the high, we make our 1. What we see is confluence with our golden ratio, a support, resistance, and support. That entail gives us our 1.618 as the main resistance. Just highlighting some facts on the chart, how this becomes important. If that's our wave 1, wave 2, our Fibonacci extension gives us our 1.618, which is 3. Now you can see here, wave 4 is almost there. But if we were to change this, it's interesting enough to see that the 1.618 is perfectly as support. Now I'm giving you tips on how to look at this chart and why we're going to be applying it on the bigger time frame. Why did we do this? We do this because from a wave 1 to 2, we get our fib extension 3. That's our method, right? So what we need to do is put that back to the original. That definitely gives us a wave 3. This is a corrective wave, and that's wave 4. How do we use wave 4 to get wave 5? In a similar fashion, we get from our root to wave 1 to wave 4, and you'll see that's our 1.18. However, down the future, we see the 1.618. So let's just mark that for a sec. Now, if this macro thing works out the way I'm thinking, this is going to be a strong resistance if it gets to that level. The other approach, so that is making assumption that this is wave 4 and wave 5 is not done. It's just going through a corrective phase. What we want to do now is, if this is our wave 1, wave 2, wave 3, 4, 5, what we want to do is look at the retracement. Now, when we do the retracement on the smaller time frame, we have some Fibonacci going on. For this period, we think that's a 1, 2, 3, 4, and potentially 5. Let's just make that on the smaller time frame. Okay, you can see that. Similarly, now what I forgot to mention is, when we do Fibonacci, if we have a wave 1, 2, 3, 4, 5, this, if that's 1, 2, 3, 4, and 5, if this turns to be the 1.618 retracement, we'll look for the 1.618 or the 1.764 from statistical point of view, wave 3. And then wave 4 is either the retracement, is either 0.382 to 0.5. Anything further, it still breaks that mold. If it fits that type of scenario, then we go for 1 for 1. So what that length equals 4 to 5. So let's see if that matches here. Just a sec. If we use the same method on the way down, let's just do this for a sec. All right, just marking it. That's all we're doing. And we're going to see confluence. So if that could be wave 5, like I said, 786 and sometimes 64. It's not much of a difference. So we're going to just put that there. Could be any number really. After once it breaks 1.618, it can go really down. But we're going to put that from this wave countdown with a 5th wave, right? We're expecting wave 5 there. Now, from a structural perspective, that is our liquidity. It's been taken out. So I am expecting a bounce, but it's not it's not the best at this point. We'll go into it in a smaller time frame later on. But that is our liquidity level. What we'll do is bring that out. It's been taken out now. And we've got a wick. 1 or 2 more wicks. Or if we get another wick, then we're likely to go up. So I'd like to see it get back tested to that level, 74K as a back test for an entry, because that was support. So we're looking for 74K to 420, whatever it is. We're looking to go long, and it could be wave 5, right? So if we were to look at it from that perspective, the 1.54 still does the job. Okay, so this could be strong, and then if that's the reversal similar to this, we can have that. However, if it falls like this is very similar to that scenario. Ideally, that's what I'm looking for. I will enter here, but I'm not expecting to go really high. If it turns out to be bad entry, waiting for too much here, well, bad luck. At least I've got that in, and we still get a trade. So you can see why I'm looking at this level as important. Now, what else does that? This could be front run. And I'm going to explain the structure, why both scenarios are adequate. While we're doing that, what I'll do is I'll put the fixed range tool in here to there. And you can see value area high is perfectly in that space. You can see it there, right? And the naked point of control is there. Okay, just put that in there. Now we're going to do Fibonacci. So if this is 1, 2, 3, 4, 5, if this goes up and then reverses, then we got a much deeper scenario that I'm not going to talk about today. But this could be a reversal and continue up for the bullish scenario. Let's just see how Fibonacci lines up with that. If that's our swing high, and we're going to go to there, 618. A 5th wave aligns with our 618 there with the value area high. So now again, what we'll do is just shade that area. Whoops, let's do it again. Level of interest is there. If there's another method to this, okay, we don't use that pivot, we use that pivot. So if we go from there all the way to that pivot point, and we use this, 618 is further down. However, let me just do this for a sec. There's another method to my madness. What I want to do is get the 618 right to the bottom, 1.618, and do that. And you can see the 618 is down here. So if price breaks through that, bounces and continues down, probably going to move there. I'm looking for this range here, Fibonacci 1, and this level starts to make sense to me. But that's something I'm not interested in right now. This pivot tells you the 618 is there. Now, having said that, let's use our actually, let's do this. So if we get our fixed range tool, from there all the way to this level here, you can see how that works out differently with Bybit. That's odd with Coinbase. So do the same here. Doesn't quite do it. From there to there. See how it's different? It's odd. So our value area high is there. So let's flip there and go here. That's nasty. And back to this one, from there to there for the breakout. So our value area low that hasn't been tapped is there for the macro. If it comes further down than this level, we'll just mark that there for later on. And these values make a difference. So I'm going to continue on with this one here rather than Coinbase. I'll start seeing some things that don't quite line up. Let's just do that again. Swing high to the 1, to that level. You can see the 618 slightly different. Okay, that's regular. You can see that there. Perfectly there. What I want to do is, because it changes value, we're going to put an anchored VWAP now. From the bottom, you can see the 618 again. So you can see how that becomes an important level. And we set our value area high, our naked point of control. So put that in there. Right, that sort of makes more sense. Now we've got one element. We've got the Fibonacci to that pivot point. 2, we've got the naked point of control. And we've got the extension. Now, the extension for Fibonacci, let's just do that again. 1, 2, 3. And you can see the 1.764 is very different to that one. This one's perfect. All right. So let's just do this for a sec. This chart's a bit better on Bybit. Now, if we're to an additional one, if we're to assume that's a high, and we're going to make this the golden ratio, give it take a bit, you can see, if we just remove that for a sec, we use the top or there. We're going to try both. Golden ratio, fib extension 1, 1.618 is slightly lower, but it's still in that box. So we have that box. Pretty important. So you can see how that works out. Now, if I was to just push this up a bit, it's slightly lower. Hold on. I'll put the 618 there. That makes sense. It's slightly lower to that level there. And what we've got to be mindful of is the liquidity here. So price can wick. Price comes here. I think it will wick to the 1.618 or this level here. And then straight. So if this drops hard, so this goes like that, and then bang, then that's a good buy. So I would put your price there, put your price there, and put your price there. So you average your way through. I don't think it will go through that easy. If it does, you better have your stop loss below this value area high. The liquidity is there, and this likely dip before it goes up. So the anchored VWAP does a good job. If we do our anchored VWAP from a few angles, let's do this for a sec. We're going to do an anchored VWAP from here. Let's see what it does. It's much lower. One more. Okay, close enough. So if price keeps dropping, it's close to one there. Anyway, so we can see the justification for this to be a key level because we've got the fixed range volume. Now what we haven't done is moving averages. So let's add them in. And I'll have a template for that. Okay, now let's look at it from a trend line perspective. Because we're going to use moving averages, the trend line becomes important as well. So what we're going to do, unfortunately, this one is not the chart. This one is. Oops. Let's clear all that. So let's look at it from a trend line and moving averages perspective and see how this fares. So we'll get our trend line, and we have this reference point, previous bottom. We have that previous reference point, and you can probably argue that the best fitted line is there. Would you argue with that? Best fitted line, give or take, is that. You can also, just let me just finish that. At times, there is, so that's our trend line. Remember I said 70K? So if we were to, let's do the Fibonacci on this one, give or take, either this one, like you can see, it's very close. A trend line, bang. And if it does something, anything like that, just grinds and grinds and grinds, it's going to go bullish divergence. Now what we can do is put in our moving averages and see how we fare with that. So if we add in our, let's just add in our 200. We have our 200 weekly EMA. And you can see in the past, whoops, the 200 daily EMA, weekly, perfectly there. COVID event, so that's not going to help. FTX saga, so it might have been there, that we don't count that in a way, but FTX debacle pushed that more than what we think, and that's why we have the RSI in such a way on the weekly. Let's just go back to the weekly. That's why it probably dropped a bit more than usual. So if it wasn't for the FTX, maybe it will be back up to 30%. All right. So the trend line and the 200. Now let's look at it from the 200 is going to be very, and you see it's in the golden ratio as well. So if I go to the other chart and I just put my 200 in there, 200 weekly EMA, but this is SMA. SMA is further down. What I want to do is EMA weekly. You can see anchor the VWAP. Now can we look at that level? Naked point of control 618 between the 0.68 value. It is perfect, really. Include the liquidity. So if we were to look at the liquidity, you might just take those little buggers out. Let's just add that in there. I'll use the second bottom one. Actually, the second bottom one's right on that as well. Because the last one's not always the case. The second one could be the case. And we see the price come down. We might see a bounce, and that might be it. And it doesn't take the liquidity at all around here. But if it drops, takes that liquidity, expect a big spike. You know, if this is a reversal, they will do that. And here's another one from there. We didn't do this. Look at that golden ratio again. Fibonacci 1. We might, even if we push it to that second point there, 1.618, sort of fits this one level of support. Why we do this is a flat correction. So let's drag out the flat correction and explain why we think this is a good entry here either way. And if it is a good bullish move, say, let's just look at it from a bullish perspective. We enter somewhere here, price goes up, could find resistance here or there, then you see the pullback. You have your second chance. We'll put our Fibonacci, give or take, wave 2, and then up. So we might be looking for some confluence in there. That's where we might find some resistance. We can also look at potentially where the resistance is coming from. We can do that. But as price moves across, we'll see what the anchor VWAP does. But if that's the case here, we can also do a Fibonacci and our golden ratios there as well. So if we just do some reverse engineering type of thing, so just imagine that's the case. What we're going to do is hide these Fibonacci's for a sec. Last one. So price comes down to this level, give or take. I'm saying slightly lower. If we make that 1 and look for confluence, so the 0.68, 618 there, it might actually just do that. It might just come to where 0 is, because why? We are making the 618 as support, and it might work that way. And the golden ratio, realistically, let's just do that. And 1's there. Give 1. Let's just do that. It might come down to the bottom. If we use the second point, so what I'm doing here, guys, is a 618, 1.618 up there. I'll use that. This looks nice. Support, the band. And so 0 might be the case there. 1, 2, 3, 6 acting as, yeah. So again, perfect level. Too many things all in there, and it could just be volatile, but it will find the spot to go along. That's how I see it, guys. Otherwise, if it goes through it and it accepts, we're stuffed. We're going to keep going down, and then we got much more lower ways of looking at it. But it's definitely going down if it passes that through butter. If it goes through this like butter, we're stuffed for the bullish scenario. Now let me talk about this pattern that I'm interested in. I'm going to bring you a chart. This is my website, by the way. See this pattern? Okay, bullish. What we're seeing is that A, B, C, and up. Anyway, let's just look at this. So regular flat. An expanded flat. This is more to my liking. Whoops. So, look at that structure there. Expanded flat. Now I'm just going to line it up with our drawing. Let's see how we do this. You can argue that's A, B, and a C, which aligns with that. A, B, C, yeah, 1, 2, 3. We have a 1, 2, 3, 4, and a 5. Regular flat, expanded flat, and then up. So that's why I think this could be 5. And then we have a our B, and our C. And if the weekly aligns with a bullish accumulation here, give it a week or more, because it takes a while. Look how long that one took. And price refuses to go down. Accumulation, the selling climax is close to it. And then we see accumulation and then up. So you can't argue that this is not aligned with the expanded flat. So go over the video again. There's some stuff I want to edit out, but you can't argue the fact that this is a possible scenario. The bearish scenario, if it gets us, can't rule it out. That level there. Now, the golden ratio, if this goes up, we'll look for this scenario where 0.5 Fibonacci, give or take. This is the bearish scenario, guys, where it's a fake out, and then, as you can see, we have our A, B, C. So it's a 1, 2, 3. Very similar to that. We have a 5-wave count to that level there, and then we break down. So that is the bearish scenario. However, on a bigger time frame, that is a B, and a C further down. And we'll look out for that scenario as well. So either way, this makes sense to go along. I think one more thing I want to put in. Here's our channel. Macro channel, top being 0. The bottom here equals 1.618. Now, if you look at this closely, we have a trend line. Like we said, this ballpark figure, the trend, if we look at it from here, the top is aligned. Then we have this level here, which is aligned. The trend line, if you look at it carefully, here, support, and here again. If you look at onto my right, it is 70K range. So we can get that trend line as well. Or we see that trend line as a last resort. Remember what I said, we showed in the other chart. If we do this, there you go. So it's just slightly higher where we tap those levels, tap that level, and again, that pivot point there, give or take, perfect. And you can see the Fibonacci 0.382 lines up there perfectly. 0.618 is further down, 0.5, but you can see this is the last resort. Anything breaks through that, we're going down deep. So my point is here, even that from this channel with Fibonacci, it's perfect. Hits our spot, 70K to 74, 70.4. Interesting fact here. Wave 1, 2, and look what it gives us, a fib extension of 1 for the bottom. We might just use that, just see how this plays out, to go for the bearish scenario again, to look for, and it might be the case where it just does that, and fib 1. Really oversold, but here also looks like a good area of entry from this perspective. Now, last and not least, let's look at the gold and how gold were affected. So gold Bitcoin versus gold is my chart. Trend line, common trend line. We missed that and it dumped. It's the last trend line that we got to. And if we look at it close, we're actually finding support. We found support. Gold is starting to pump. So it might come down to this 1.618 ABC correction. So gold might just go up to this anchored VWAP, previous low or whatever it is, come down, or find support here. But you can see how gold, Bitcoin to gold ratio stands out as well. If this drops, gold's going to be humongous, or Bitcoin drops a lot, and then I'll be looking for that to match that previous low, or got Bitcoin versus gold, and then back up again. It seems to be a straight line right now. In the past, we had 1, 2, 3, 4, 5 Bitcoin versus gold. This one is it just seems to be as ABC type of thing. One more. Let's look at one more thing. Yeah, right. Let's look at Tether. We've got this Tether chart. So Tether, we had this Bitcoin. Tether, if you look at it carefully, it dropped. We want to see this crossover for confirmation. Once this crosses over, this is the weekly chart. If this signal crosses over, at the moment it's just pointing down. If it crosses over, we might see some bullish moves on Bitcoin, the Tether. Okay, so it's not the best when it comes to Tether. And let's look at Tether dominance. You can see how Bitcoin dominance is finding support. Like this is a weekly chart. Resistance, resistance, resistance. This might just go up a bit more and then drop. So we have an ABC before. So if that happens, or we see resistance here. So here's our Tether dominance. So this is Bitcoin dominance. It's very hard. I don't use it that often, but here was a good sign. And if we look at Tether dominance, the previous high. So what we're seeing is it broke out. It broke out from this triangle accumulation and it's breaking up. It can go up to there, and that's where I think maybe we'll just do that, come down. It's a hard one, and we can't really use it at this point. But if there's a flush out, that level will be nice. Last flush out and then down. I don't think that will happen, but yeah. So I'm looking at that as well. You see how I align my Fibonacci, 1.618, maybe here. But this might be accumulation, and it might align very well with our Bitcoin chart. That's it, guys. I'll wrap it up on that. I hopefully it makes some sense to you. Hopefully it gives you some confidence as to how to approach the market. Right now, if we look on the small time frame, there is no trade. I'm looking at it from that perspective. There might be a bounce sideways, but it doesn't look strong. If anything, it'll take that liquidity and then back down again. And it might just do something like that before it drops. Yep. So that's small time frame trading. That was your opportunity there. Looking for shorts further up with liquidity. We're in a range. So trade the range until this decides. But I think this is what's going to do. And then come down. So we have our, if this is our 1, 2, 3, 4, and small time frame, 1 hour, that's 5. Perfect. That's it, guys. I'm going to leave it at that. Please give me a like and share, and I'll talk to you soon. Cheers.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.